Perfect. And I'm just going to give it a few more minutes. And I know many of you that are joining us today are, in the middle of a work day as well. So it's totally fine if cameras are off, but I will invite that the chat is going to be monitored throughout the presentation by myself. So if you have questions, you can absolutely put your questions into the chat and I'll do my best to bring them forward to Kathy. I also will say that it's a safe space. So for anyone who wants to directly ask, you can use the hand raise emoji and I'll do my best to select you. So we'll kind of check in throughout to see how people are feeling and leave some questions for the end as well. I'm just gonna do that. Perfect. And yeah, we'll go from there. I think some familiar names I'm seeing as people are entering into the space in the room. So, for those of you that don't know me, or maybe this is your first Conscious Economics event, my name is Rhiannon Rosalind, and I am the founder of Conscious Economics. We're a national organization, and we've been working on a project for the last 3 years that's called Heartwork. And Heartwork has really been focused on what are the experiences of women and gender diverse individuals who are operating within the gig economy? So, and how can we support them? So, we did a national deep listening tour across Canada, and we spoke to gig workers from every province and territory, and we were able to find out what were some of the deepest challenges. And if I could condense those challenges, good morning from Edmonton. If I could condense those challenges, I would say that economic insecurity, financial confidence is one of the biggest issues that we're seeing come up time and time again for gig workers, for creatives, for micro entrepreneurs, and taxes is a part of that. And so we've been so honored to have H&R Block be one of our community champion partners of the Heartwork Project. I know, Kathy, you've been out to many different events that we've done over the course of the program. We're getting ready to do our big final conference next week for those of you that are registered or coming out in person. And today's session is really just what it's called, tax tips for gig workers. As we're approaching that season right now, I think people are feeling anxious around what they can do in order to best prepare for that. And that's why Kathy is here with us today. So what I'm going to do is I'm just going to make sure that I've let in who's here right now, and I'll continue to let in as people arrive. I'm going to introduce Kathy. And Kathy, maybe we'll start off by just having a little chat before we get into the
Sure.
presentation. So Kathy, you're a district manager for H&R Block Canada, and you've been the main lead champion for the Heartwork Project with us over the last bit. For us at Conscious Economics, we really feel that some of these conversations around money and finance and work, they're emotional, they're psychological. It's not just about knowing the right thing, it's about understanding sometimes what limiting beliefs that we have that's holding us back from, doing the things that are going to propel our business or our finances forward. So with that said, we always like to create a safe space in the place and in the room and kind of get to know the people that we're going to be learning from. So do you want to tell us a little bit about you, like beyond just your role at H&R? Who are you? Tell us about you. How did you get involved in this work? And why are you so passionate about supporting women on this topic?
Yeah, so my career has mostly been as a leader in retail, but when I had my two little girls, I had a real struggle finding daycare in my price range because I made too much to qualify for subsidy, but I didn't make enough to pay for the daycare. I was just basically working to cover my daycare costs. So I decided to put my career on hold and I opened my own daycare in my home and ran my own business for 7 years to fill
Wow.
that gap and to be there for my kids when they were little. And I was scared about tax remittance and reporting my income and should I hide some of the children I'm looking after that pay me by cash? And I did not know anything or what to do. So I didn't have any resources or anybody that could teach me or tell me or guide me. So I had to become my own kind of expert, and I did a lot of research, and along the way learned a lot of tips and tricks to the point where I started doing taxes for myself and my whole family. And I became very passionate about, how gig workers can, get the information that they need in a timely fashion to remove some of that fear. And then when I returned back to the workforce in retail, I ran Indigo at the Eaton Center for many, many years. And I would meet a lot of like authors that were self-published and artists that would try to come out with, art books or cookbooks. And met a lot of people in the gig economy throughout my time at Indigo and throughout my time now at H&R Block. And I really am passionate about providing that help and removing that fear.
Thank you so much for that. It's such an amazing story, and I love hearing when those real life experiences lead us to the work that we're doing. I think that that's
Mhm.
so, so special. I want to say for anyone who's in this space as well today, so gig worker as a definition is quite broad. And so I just want to make space for anyone that's here that might think like, oh my goodness, do I even qualify, to be called a gig worker? So some gig workers are doing outside contract work, and they have a 9 to 5, but they're starting to earn income, through another stream. Some gig workers are artists and creatives, and so they are always kind of looking for that next gig, but they may not see themselves as an entrepreneur when in fact you are. And I would argue that you do have a micro business, and that the more that we start to think about it in that way, the more supports there actually are in order to expand and grow your business. Or you may already be an entrepreneur, small business owner, and you're really starting to navigate that new terrain in terms of how do you make sure that you are in alignment with what you need to do and not avoiding. For me, what brings me to this work, I've been an entrepreneur for over 17 years, which ages me. I will talk louder. Yes, sorry about that. Um, so I've been an entrepreneur for over 17 years. I run multiple businesses, not-for-profit businesses, for-profit businesses. And one thing that I have spoken very openly about is I come from a background where there was quite a bit of financial trauma in my upbringing. My mom was a single mom, and I was one of the first in my family to go on to post-secondary education. And we just didn't have a lot of conversations around money growing up in my household. Nobody was a business owner or an entrepreneur in my household. So I'm sort of like first generation business owner. And so I just didn't have that network of support around me. And I know that when I was navigating in my early days of running my business, I was afraid of conversations like tax. In fact, I felt like I would rather avoid it, and sometimes I did, and that caused more stress and anxiety, if I'm really honest. So, this is a safe space here to be able to ask questions. Kathy's going to lead us through a wonderful prepared presentation that will probably highlight a lot of the things that you've been thinking about, but we are going to have that interactive portion as well. So, Kathy, I'm going to pass it over to you to get us started. And I, like I said, will monitor the chat and pipe in with anything that anyone wants to ask, and we can go from there.
Sounds good. So I thought I would share our agenda. So we did the introduction already, and then we're going to talk a little bit about who H&R Block is, and then we're going to get into, when should you report your income, what type of business structures you should register your business at, when you should register for either GST or HST. There's a program with the CRA called Quick Method of Accounting. Is that right for you? We'll talk a little bit about CPP, QPP, and EI, employment insurance, and then we'll talk about business expenses. A lot of people use their vehicles and want to write off supplies and other deductions. So we'll talk a little bit about that. We do need to touch on audits and assessments, a little bit scary, and then deadlines and important dates. And then, as Rhiannon said, we'll do some interactive questions at the end. So this is just a disclaimer. This just talks about general rules that are applicable to small business owners. But you must be residents in Canada. It does not intend to replace any professional advice for a specific situation. So these are just broad general rules. So a little bit about H&R Block. So H&R Block is the largest retail tax preparer in Canada. We have been preparing taxes. We're in our 62nd year in Canada, and we've prepared more than 2 million tax returns last year. We have about 1,000 locations across the country with nearly 7,000 tax pros that have to go through quite extensive training every fall. We call them our tax academies, and they're leveled and tiered. So, level one is brand new to taxes. They have to do at least 200 taxes at level one before they can qualify to take Tax Academy level two. And it goes all the way up into level five, which includes US taxes, and we call them a Master Tax Pro. We have, out of those 1,000 locations, about 35 to 40% of them will stay open year round so that we can support our clients in the off season with things like audits and reassessments. And then we have a H&R Block guarantee. We will guarantee the maximum refund. We will guarantee your satisfaction, and we will offer audit assistance. We also are a business tax expert. So we have options for business owners to see our tax pros that are specifically trained in the Business Tax Academy. We have more than 200 hours of in-person training, and we do it updates and training annually. So if there's any changes in the CRA or any changes to what is eligible, we apprise our associates every year. They must take this training. Right now in my district, I have about 250 associates, and I'd say about 60 of them are trained to do business taxes. And we will guarantee a maximum refund with our business clients. We also have a tax academy course called Gig Workers, and it includes everything from Airbnb to artists to farmers that we will have annually updated for our tax experts. They're specially trained, and in every office we have at least one. So you can go to any H&R Block office and you can ask for someone who is specially trained in the gig worker economy. We will also offer all of you a flat rate pricing for self-employed T1 returns. The price is tiered by timing, basically because of how busy we are. So if you come in and see us before March 31st, the basic rate would be 169, which is really competitive for gig workers and business returns. We will be emailing out the coupon code to all of you following the webinar. So it'll be super easy to follow and super easy to access so that if you do want to come and see us in H&R Block, you will get a nice discount. We also offer something called Peace of Mind. This is a program that we put into place about 3 years ago to help our clients with any sort of assessment or audit from the CRA. Over 2 million people are audited or reassessed every year, and they can go back 7 years. And we see gig workers get audited a lot. It's a very high percentage. Because you're claiming things like your vehicle or supplies, it's a very ripe pool for the CRA to audit. If you purchase Peace of Mind, it's $20 for your return, basic return. It will cover you for 3 years for year-round support, audit assistance, audit representation. So we'll stay on the phone all day with CRA for you if we have to. And we'll cover up to $3,000 of owing to the CRA if the mistake was done by us or by you. So that's a pretty good program, and a lot of our clients take
We
advantage
have
of
to
it.
stop on this because this
Okay.
seems too good to be true.
Yes.
It's $20 and even if there was a mistake on the gig workers end, you will still cover three up to 3,000. Could you
There are
explain
some
that?
stipulations.
Okay.
The mistake would be if they were missing like a T4
Okay.
and they're underreported income, we would
Okay.
cover. But if
Okay.
the mistake was intentional, our
Of
POM
course.
team has ways of figuring it out and finding it out. So our
Yes.
POM team would let you know what you're eligible for. But
Yeah.
if we make a mistake, you're covered guaranteed up to $3,000.
100%. Okay.
Yeah.
I wanted to highlight this one because I think it is such a great program actually, and in working with so many gig workers and artists, and all the artists that are here in this space right now can probably attest to this. If you get flagged by CRA and it's for like equipment that you use for, editing or producing, sometimes that CRA agent has no idea
No
what
idea.
those things are. So you're getting flagged and you're going through this big headache. It's emotional, it's stressful. So to have that backup and somebody that's there help explain to the agent what they may not understand because you are actually claiming something that is completely, allowed. This is a big one. Like this came up in a lot of our conversations across the country. So I just want to flag this one. And I think that for $20, like this makes a lot of sense.
It makes a
So
lot of
yeah.
sense. And just the time alone that it takes sometimes to sit on hold with the CRA is huge. Most people don't have the time. Sometimes you're on the phone for 2, 3 hours. It's like calling Rogers or Bell, but even worse. And the CRA also has seasonal workers that come in to help for the tax season that may not necessarily be trained as fully as someone who works in the CRA year round. So mistakes do happen on their end. And we're the experts. We'll be able to say, no, this is something that this client is eligible. And we file, there's certain forms that we file to fight what you're being audited or what you're being reassessed. And we can fill those out with you. We can fill it out for you. We can fill it out and send it to the CRA and represent you. And you can put us as what we call a rep a client. We will represent you. You approve it and we will be able to fight on your behalf so you don't even have to worry about it. We're doing it for you behind the scenes. So it's a huge, huge program that our clients love and take advantage of for sure.
Yeah, I think it's great. Thanks, Kathy.
No problem. Okay, so that's a little bit about us. Let's talk a little bit about you and what you need to do in terms of your taxes when you're a gig worker. So, reporting income. So, no matter what method you use to generate income from gig work, it must be reported to the CRA. And it's usually on the statement of business or professional activities. We call it a T2125. And if you're in Quebec, you need that and the TPE. Excuse me. If you fail to report any income, you could be liable for significant penalties. So please make sure that you keep track of your income and report it on your statement of business. Even if your total income isn't higher than the basic personal amount, meaning you won't owe federal taxes, there's still advantages to reporting what you've earned. You will still put a portion of what you've earned into CPP. So a lot of gig workers think, well, if I didn't make the minimum, I'm not going to bother reporting it. But then you're not actually showing any contributions towards CPP. So when you're ready to retire, you'll have less money to be eligible for your pension. So it's still important to report. The government also needs this information to determine if you're eligible for tax credits like GST credits or child benefit credits. It will also enable you to contribute more in your RSP and your tax-free savings accounts. So even if you don't meet the basic personal amount, it's still super important to report your income for these reasons.
I will also just chime in really quick and say that for those that are starting their businesses and have goals in growing their businesses, reporting is also helpful because it shows an arc of where you started and where you're going. So
Mhm.
oftentimes when we want to get loans from banks as we're growing our business or whatever else, all of these things actually help to professionalize your business. So I agree with getting in that habit of doing that, even if you are under the threshold right now. Yeah.
That's an excellent point, Rhiannon, for sure. So, is your income from a hobby or a business? So, the decisive criteria is basically your profit or loss experience in the past couple of years. Also, did you take any specific training. So my daughter right now just opened up her own Etsy shop and she sews. So she's making like bucket hats and pouches and little purses and things like that. And she took quite a lot of different sewing workshops. And she also took a business course at college to understand how to do, certain things and create her own P&L. So that, although it was her hobby, it's now her business. So if you took any specific training, if you're actually, intending to make a profit and running it like a business, then it's a business. If you're just doing it for fun and you happen to, join a couple of fairs and, set up a craft table, let's say, and you just make a little bit of money every couple of years or every couple of months, you might want to consider that a hobby. So it just depends on what you're doing. And if you're ever unsure, you can always ask. You can even just come and get a consultation at H&R Block, and we can help guide you and give you some advice. So there are different types of business structures. So the first one is self-employed. So you would be the sole proprietor. So all your business income and expenses will be reported on your personal tax return. Then there's an incorporated business. So this is separate. So the business files their taxes, and then you get paid a salary, and that salary is what you report on your personal taxes. So when to know if you should be a sole proprietor or incorporated business, we'll get to on the next slide. But in all cases, since January 2024, there's been new reporting obligations for digital platforms. It makes it easier for tax authorities to know about your income sources. So it's a lot harder to hide things. It's a lot harder, especially with things like e-transfer and, direct deposit and, digital footprint that we're creating. It's not like it used to be before with like cash under the table being something we could hide. So, and unless an exception is met, all of your income is reportable on your tax return. So keep records of all your transactions. So like my daughter right now is keeping a record of all the supplies, all the zippers, everything she's buying to try and, understand what her cost in a year would be, so that she can determine if she's going to make enough to be a business or self-employed. You will also have GST and HST obligations as well, depending on how much you earn. So the common benefits to make your business a corporation and to incorporate is you have a lot of tax deferral opportunities on your own personal tax return and income. You can do some income leveling. We're going to see a chart in the next slide that will help you understand. You're going to have tax-free transfer of assets to the corporation and the possibility of lower taxes if you ever sell your business, because you'll have a lifetime capital gain exemption. There are some drawbacks, though. It does cost you more per year in administrative costs. Also, if you're not a full permanent resident of Canada or a Canadian citizen, not all provinces will allow for you to incorporate. In Ontario, you can, but there's provinces where you can't. And then there's no depreciation expense in the years that you may be transferring business assets to the corporation on your personal return. So keep in mind, the decision is going to be different for everybody. Your business involves various factors that you should consider before you make this decision, and always seek some advice if you're unsure. Other factors that may not be related to your business also need to be considered. So things like if you pay for childcare, if you're looking to buy a house in the future, if you have remaining RSP or TFSA contribution room. So I know my friends during COVID had their own business and they were a sole proprietorship. And because of that, they were not eligible for CERB. And it put them in dire straits because their business relied on in person. So they decided to incorporate. And now that they're incorporated, they're eligible for a lot more with the government in terms of benefits, and they can also level income. So there's drawbacks and positive for both. So here's an example. So John is single. He lives in Ontario. He works full time as a teacher. He bought two cars and started renting them on Turo. So he wants to set aside his net earnings for retirement. So if you look here, if he stays as sole proprietor and he earns $25,000, his expenses are $5,000. He has $20,000 in taxable income. He gets nothing back from the CRA in terms of corporate taxes, and he ends up paying 7,794 back to the government in personal taxes. If he incorporates his business, he's going to get 2440 back from 2440 as a corporate tax income plus 2028 on his personal tax income. So he only owes 4468 instead of 7794. So he's going to save $3,326 by being incorporated. So this is just a small example of the differences on your tax returns between sole proprietorship or incorporation. I can send this presentation out to everyone as well, so you can kind of use it and refer back to it if you'd like
Yeah,
to.
we can send it out to everyone who's signed up. So if you send it to me, I'll make sure to
Okay.
link it in the piece. I had a few questions just pop up as you were talking about this.
Sure.
When you talk about the administrative expense of incorporating, do you have an average idea of what that could look like?
So it just depends. I know that you would need, if you incorporate, you need a business bank account. So it
Mm-hmm.
depends on what bank you use, and what their fees are and what you want to use that for. If you want to use that for payroll, you will also need some sort of payroll program, to be able to give yourself a salary. So
Mm-hmm.
some people use QuickBooks, some people use, their own Excel spreadsheet, which takes time. So it just depends on what you want.
Sure.
On average, it's anywhere from $1,000 to $5,000 a year.
Okay. Yep. Thank you for that.
Okay. So when should you register for GST or HST? So most businesses, both self-employed and incorporated, it's mandatory for all business revenues, um, for you to report the total amount of all business revenues. So even if you earn money outside of Canada, you still need to report that as well. If it's greater than $30,000 over the previous 4 consecutive calendar quarters. You can choose to register before you reach that 30,000 threshold, which will set you up. Like if you know you're growing and maybe this year you're only going to earn, 25,000, but you know that next year you're projected to grow that, you can register before you reach the 30,000 threshold so that you're already set up and it's one less thing you have to worry about. You will be able to claim the input tax credit. So we call it the ITC, or the reimbursement of the GST and HST paid on your business expenses. There are some exceptions with that though. People like taxi operators and commercial rideshare like Uber drivers, those are the exceptions. But once you are registered, then you need to start charging GST and HST on all business income. So if you're a consultant, that you do on the side and you've now registered for GST, you can't just do a flat rate. You have to do your rate plus GST. So you might want to look at your prices for your hourly consulting fee to see if you want to incorporate the GST cost so that the price is the same. And that's from the date that you register. So if you register your GST on April 15th, then on April 15th, you need to start charging GST and HST on your services.
We have one question that's coming in. If your
Mhm.
gig is GST, HST exempt, does it make sense to register if you're making under 20,000 a year from it?
No, I wouldn't register at that point then.
Okay. Yeah. Yeah. Perfect. Thank you.
So the CRA has something called the quick method of accounting. And basically, this offers translation services. The corporation and shareholders must be residents of Ontario. You must have annual gross sales, and you must have no depreciable assets that were bought during the tax year. The quick method remittance rate in Ontario service businesses is 8.8%. So basically, what you do is input your sales, you input your sales tax. It gives you a total on the left-hand side here, and then it tells you what is subject to HST, how much HST you paid, and then how much you need. The standard method tells you you would remit back to the CRA 37,000, whereas the quick method, which is your total, which is B on the side here, 339, at an 8.8% is only 29,832 that you need to remit back to the CRA. So you're actually saving $7,000 by using the quick method of accounting. So it's hard to know who can use this method and if it's right for you. So if you filed an election with the CRA to use the quick method, so my business account online, you're eligible. If you did not revoke the election of the quick method in the last year, so let's say you filed an election that you want to use this, and then 2 months later you change your mind and you revoke it, you have to wait a whole year before you can use this method again. You have to be permanently established in Canada, so it can't be only income that you're earning from an Airbnb in Mexico. It has to be a business in Canada. Your worldwide revenues, so you can do Canada plus your Airbnb. So let's say you have an Airbnb in Canada and one in Mexico, then you can use both. And your worldwide revenues, including whatever you charge for GST and HST, but excluding any capital assets. So let's say your Airbnb had um, uh, uh, a huge gazebo in the back that you sold off because it just wasn't fitting the backyard anymore, and you sold it, let's say, for $10,000. That would be considered an asset of your business, and that is excluded in your revenue. So if your worldwide revenues are not more than $400,000 for either the period of the first 4 quarters, or the last 5 fiscal quarters, or the period consisting of the last 4 fiscal quarters out of your last 5 fiscal quarters. So it depends on how much money you're making on these two Airbnbs to see if you would be eligible for the quick method of accounting.
Okay. We have a few other questions, Kathy.
Sure.
So we have one question. Do self-employed people issue their own T1s?
Yes.
Yes. Okay. Um, and then we have another question. What should somebody do if they haven't registered, but they are making over $30,000 in their side business? Register right away?
Register right away. Yeah.
Okay.
Because
And
they will come after you.
they're coming for you.
No, I mean, honestly, how long have they been making $30,000? So if it's within the last year, then you're fine. But if you've been making over $30,000 and you haven't registered for the last 5 years,
Hmm.
then you would need to talk to a professional to see what your best course of action is. Because once you register, then they look back 7 years. So
Okay.
Yeah. So I would recommend going to see someone either at H&R Block or an accountant that you may already use to
Yeah.
ask them what would be the right course of action.
Way to do it. Okay. And
Yeah.
then one more question is the quick method just in Ontario and BC, or is the quick method available for Canadians everywhere?
All of Canada.
Okay.
Quebec might be a little bit different. I'm not really knowledgeable about Quebec. Their timing is different. The PQ, everything that they do, RQ in Quebec is there's exceptions to everything.
Yeah.
So it is available in every province. Stipulation, I'm not 100% sure about Quebec, but I can get that answer for you.
Okay, thank you. And then we had one more question. If somebody had registered and then they're no longer, so they registered for
Earning?
their GST and they're no longer earning, does it make sense for them to deregister is the
Yes.
question.
Ye-
Yes. Okay.
Yes. Because
Okay.
then you no longer have to charge GST and HST to your clients.
Okay.
It's a lot easier to, if you're under the 30,000 threshold, then it's a lot easier to keep track of your income and your earnings.
And so we don't think that they're going to flag you if you've been registered and now all of a sudden you're not registered. Like you think that
No,
that's
no,
okay.
because, and we saw that a lot during COVID, right? We had a lot of gig workers who, would do things in person that they could no longer do, like yoga teachers and things like that, that their income significantly dropped. And
Right.
so now it doesn't make sense to charge GST and HST because they're not meeting that threshold. So it won't flag you, no,
Okay.
as long as you are reporting your income correctly.
Okay. Okay. Thank you for that.
No problem. So there are some businesses that are not able to use the quick method. So anyone that is a gig worker that provides kind of bookkeeping or financial consulting or tax preparation services. So I open up my garage and I'll just do taxes for people on the side, that kind of a thing. I can't use the quick method of accounting. Persons that may provide legal or accounting or actuarial services. That's a hard word to say. Any sort of listed financial institutions, charities cannot use the quick method. Public institutions, municipalities, and public colleges. Nonprofit organizations with at least 40% government funding in the year, and then hospital authorities, facility operators, and external suppliers are not eligible. So if you're ever unsure, you can talk to someone at CRA to see if they can guide you, or you can come and see one of us at H&R Block and we'll be able to help you. Okay, so CPP,
We have one more question, Kathy,
sure.
before we move on. So
Okay,
someone's asking, do grants not count towards the $30,000 threshold?
no grants count towards the 30,000
Okay,
threshold.
so it has to be primary income
Primary
profit.
income.
Yeah.
Correct.
Okay,
Yeah.
perfect.
Okay, so what about CPP, QPP, and EI? So should you be contributing to that? So if your net self-employment income after you deduct all your business expenses, excuse me, are more than 3,500, you need to start contributing to the CPP plan, or if you're in Quebec, the Quebec pension plan, because it's separate. You employment insurance, on the other hand, is optional. So if you're a sole proprietor, you're self-employed, it's up to you whether you want to contribute to EI. For women, I would recommend it, especially if you know that you're going to start a family, because you want to be able to take advantage of the parental leave EI benefits. However, if that's not important to you and you don't think that you're ever going to need it, then it's totally optional for self-employed workers. So as a gig worker, you can opt into the EI program by registering with the Canadian Employment Insurance Commission. You'll be able to register for benefits like I said, maternity. Also, it'll cover you if you get sick or you want to take advantage of the family caregiver benefits. So, if your mom is, sick and you want to take time to be her caregiver, you're eligible for benefits through the government if you pay into EI. And then there's also compassionate care benefits. So you may not be the prime caregiver, but your headspace, you can't function because what you're dealing with your mom, you can also apply for compassionate care benefits. So, self-employed workers are not eligible for regular EI benefits, which provide financial support to workers who are laid off or lose their jobs. So, let's say you're a consultant and the business no longer needs your consultant fees. They've done their project, they no longer need you. You're not eligible for EI for that. You're only eligible for the four above.
So I still agree with you that paying into EI, especially as a gig worker, is a really helpful thing to do. So again, just in highlighting what was coming up in the research and talking to folks, this economic uncertainty or stress of when you're going through a life cycle challenge and then you don't have that backup support and you may not have the savings behind you personally, this is, you know, one of those extra pieces that you can do that will be minimally felt as you're contributing, but could make a really big difference if you happen to go through one of these challenges, which as we grow, we all are going through these different challenges
Absolutely.
at different times in our lives. So I just want to highlight that for folks who may feel like you don't really have a great savings personal plan for yourself, or you're, maybe only earning enough to make certain ends meet. It's expensive to live right now in Canada and around the world. This is a small thing that you can do that can kind of give you a little bit of that protection for those life circumstances that might come up as a gig worker. So I just want to highlight that.
Especially the sick benefits, because, when I ran my own business, if I was sick, like I either had to grin and bear it and keep going, or if I took the day off, I wasn't getting paid. So it's, really important to look at what all your options are and decide if you can afford it. And if you can, then I would highly recommend getting it. So we're going to switch gears a little bit, talk about business expenses. This is always a confusing topic for gig workers to know what they can claim, what they can't claim, what's considered an expense and what isn't. So the personal vehicle is the biggest one. What can you deduct if you use your personal vehicle? So if you're self-employed and use your car for your business, you can deduct a portion of the following expenses. So I just want to talk about that word, a portion. So let's say you rely on your car 25% of the time you're working, you can claim 25% of your gasoline and car repairs and oil changes. You can't claim the full amount. So if you are, let's say, um, uh, Uber driver, and that's your only gig work, then you're using it 100% of the time that you are working, so you can claim up to 100% of these expenses. So the portion is based on how often you use your vehicle for the job that you do.
Yes.
You
We
go
have
ahead.
one question.
Sure.
Does the car have to be registered in your name, or could it be in a spouse's name or a family member?
Unfortunately, it has to be registered and insured under your name
Okay. So if you are using a household vehicle, then the recommendation, if you want to be able to claim this, is to get your name added
as a
um,
secondary
as
driver.
a secondary driver to those
Yes.
documents. So that might be a smart thing to do if that's the case. So you can still do that. What about car rentals as an expense?
Yep. You can expense car rentals as well.
Okay,
Yeah.
perfect.
And then also, if you are put on as a secondary drivers to the family car, the insurance increased monthly because now there's two drivers insured. You can claim a portion of that insurance that increased as well. So it may cost you more to put yourself on, but you can get that back at the end of the year for tax returns. Okay. And anytime you need to, register a new vehicle, or anytime you need to, update your license, things like that, any costs uh, associated with that, you can also claim. So if you're ever unsure I don't know how much I actually use my car. I would say talk to somebody either at H&R Block or your accountant. They have a guide to kind of know how much you can deduct based on what you're doing. But keep track. You need to keep track of your kilometers as well. So this is an example here. My business partner, Yannick, who helped me put this presentation together, just put a little example here. So he did it for the whole year of 2025. So he needed his car to buy office supplies. He needed his car to meet with a client. So he kept track of his kilometers driven. Your phone could have apps that can keep track, and your car actually will keep track. Most cars nowadays, you can do a start trip and end trip, and it will tell you exactly how many kilometers it was. So it's a lot easier now. I remember I used to work at Staples. I was a district manager there, and we would sell, truck drivers would come in every year and buy logbooks. And then every year, as digital things came into place, those books were no longer selling, because it's so much easier now to track, both on your car or your phone.
So much easier.
So
I
much.
I have one other question that's
Sure.
coming. So this question is about working from home. So if someone works from home but shares the rent with their partner, if they claim 25% of the workspace, should that be split between the two of them?
No.
No.
If
Yeah.
if you have let's say a room in your house that you're using as your home office and it goes by square footage
Mm-hmm.
basically. So if your house is 1,200 square feet and that room is 200 square feet, it's 40% or 30% of your house that you're
Mm-hmm.
using as your home office. So you can deduct 30% of your rent.
And what if their partner is also deducting because they use that home office as well? Like, I think that's the question.
Oh,
Like,
that's the question. Then
yeah,
yeah, then you would need to split it. So you would do 15% and they would do 15%.
I see. So they
Yeah.
couldn't each claim the same
No.
percentage on their thing. Okay, I think that's the
Unless
question.
it's two different rooms. If you're using, he has an office and you have an office, or she, whatever, however, you
Yep.
can definitely claim both rooms and do
Okay.
30. Yeah.
Okay.
Which is what
And
my
then
my husband and I used to do back when I ran my own business. I claimed the basement apartment as my daycare, and he had an office upstairs. He worked from home. He claimed his office.
I see.
So we
Okay,
did two separate claims. Yeah.
that makes sense. So it sounds like for this participant, their partner's not claiming anything, but they just wanted to understand if they had to split it or if they could take that full.
Well, if the partner's not claiming, the CRA is not going to know. So claim
Yeah,
the full 30%, right?
exactly. And they
Yeah.
said if I pay a higher amount for renter's insurance because I have a business equipment at my home,
You
can I
can claim that
claim a
as well.
portion of my renter's insurance? Yeah,
Yes,
you
you
can
can.
claim that. Yeah.
Absolutely.
That's amazing. Okay, perfect.
Yeah.
Thank you, Kathy.
No problem. So here's a list of some other business expenses that you may have. So your cell phone. A lot of people don't know that how many times do you answer an email on your cell phone or make an appointment on your cell phone? You can definitely deduct a portion of your cell phone bill. Like you said, the renter's insurance or home insurance or car insurance, absolutely deductible. Any office supplies, you need a new office chair, you need a new printer, you can definitely deduct those. Accounting fees. So if you are a small business owner and you pay H&R Block to do your accounting, we have a program where we have bookkeepers that will do your accounting all year long, then you can write off a portion of that in your deductions. A lot of people don't know that you can do that.
And this would include travel insurance too if you were traveling for work, I assume. Oh, did she disappear? Oh my goodness. I'm sure she'll be back. So we'll just wait. And hopefully I'm getting your questions right here. Let's just wait for her to come back. Like I said too, I will share the presentation that she's prepared when I send out an email for everyone who's registered so you can go through and see anything in case it's a lot of information. I know it's a lot of information even for me as she's speaking about it. Some things I'm following and some things are like glazing over, which is what happens in these topics. So we'll wait to see her if she's coming back. Mhm. Mhm. Gonna send her a little note and see what happened. Oh, there. She's back.
I'm
Hi,
so
Kat.
sorry.
It's okay.
My
We would like,
computer just crashed. I felt it getting warmer and warmer and warmer, and then
oh
it
no.
just crashed. So I've
That's
now,
what tax talk will do,
yeah,
not just to your
too hot.
computer.
I'm so
Yeah.
sorry, everybody, for the delay. I really apologize. I've now propped it up on something that has slats so it can breathe. So hopefully
Amazing.
we won't
That
have.
works.
Okay,
So let's put the presentation back up. I do have a few other questions here, so I'm
sure.
gonna pull those up. Um, so let me just hold on. Maybe I can extend this so it's easier. Okay. So we've answered the renter's insurance. Travel's insurance is eligible if you're traveling for work, that's no problem.
Yep.
Similar question for cell phone. On a family plan under a spouse's name, can a business expense still be claimed for cell
Yes.
phone?
If it has the same address and that phone number shows up under the bill, you can claim the cell phone, even on a family plan. Yeah.
Okay, great. And then where are these deductions submitted? On the T1 or when filing the
When
GST?
we file your taxes, there's a separate form that we fill in to deduct your business expenses. So it's not on the T2180, which that only reports your income. And then we
Okay.
do a separate form to report your business deductions.
Okay, perfect.
Yeah.
Thank you for that. And we'll let you continue on.
Yeah, so we left off with accounting fees. So if you also decide to incorporate and you have some incorporation fees when you first set up, you can also deduct a portion of those. Also your bank fees and transaction fees. And then, obviously your home, we talked a little bit about that and what that portion looks like. Okay, the big scary topic, audit and assessments. So we know,
Ah,
yeah. We know that gig workers get audited slightly more than non-gig workers because of the business expenses. So most audits are no longer conducted in person. They used to come to your business and go through your files, and it was a big, scary thing. Now it's all online. You just have to submit the requested document either by mail or we can submit it electronically for you if we're representing you. As long as you have paperwork to back up your claims, you have the receipt for that printer, you have your Rogers bill showing your cell phone, you have your car insurance payment on your bank statement. A lot of these things can be backed up. But like Rhiannon said at the beginning, some equipment that they may not know is a part of your business, that's where you need to do a little bit more in terms of explaining why you need it for your business and explaining, why that expense is eligible. So never
well,
ignore it.
one
Never.
little tip
Yeah.
that some of our artists and giggers in our community do is whenever you're buying something for your business, keep a little document on your phone notes or whatever it is and write a little blurb of what you're using it for. So, like, I'm buying these cords for, my extension to record my XXX. Have it all just there because if this ever happens to you, you can literally cut and paste the explanations and go through, and it just is a lot easier. So, yeah.
Another tip too is a lot of the times receipts start to fade over time. So what I do or what I did was there's so many different like tiny scan apps on your phone where you can actually scan it right away and turn it into a PDF and just save it. And then that way if it fade if they because they can go back 7 years and then that receipt fades and now you no longer, especially the thermal paper ones, you longer can no longer see or have the proof to back it up. So a big tip would get one of those like tiny scan apps on your phone, and as soon as you pay for something, get in the habit of scanning it and then saving it on your computer in a file called receipts or something. Big tip.
Yeah, that's a good advice. Someone's asking about that fading of receipts, and digital copies are fine, right?
Yeah,
Yeah.
totally. Yeah. So the important thing is make sure you respond to the auditor's request. A lot of people will be like, "Oh, hopefully it goes away," and they ignore it because they're scared. And the anticipation of the audit is always worse than the actual audit. Don't ignore it. And if you're ever unsure of, what they're asking for or what they want, come and see us. We'll help you. We will represent you. We can take that stress off your plate. Or if you have an accountant that you're already working with, they'll help you as well, as long as they're an authorized rep in CRE for you. Now, a lot of people won't be able to meet a deadline that they're asking for. They're flexible. If you talk to them and say, there's no way I have this, and this, I can't, meet that deadline. Can I please, work with you on that? They'll usually give you an extension. I'd say like 80% of the time they'll say yes and they'll give you an extension. But if you ignore it, no extensions given, the penalties will be harsher. If you're reassessed and you disagree with what the auditor decided, you can apply and submit a notice of objection. So for that piece of equipment that they don't understand and they say, you're not eligible to claim that, we submit a notice of objection on your behalf, or your accountant can do it, or you can do it yourself. And then they review it. It does take some time. I'm not going to lie. It is a lengthy process, but it puts everything on hold while that notice of objection is in place. So I would recommend doing that if you know for sure that you can claim something and they said you couldn't. Definitely do that right away because it puts everything on hold, and then you can work with the auditor to understand what you're eligible for. Any questions, Rhiannon? That's
No,
pretty clear.
I
Okay.
think, oh, something came up. Refiling a past return because of earning or expense omissions. What happens there?
Unfortunately, so let's say they know that you earn more than what you actually claimed. Like, for an example, last year, the CRA was really late in uploading T4s. So we would have clients come in with three T4s, but when we have what's called autofill my client. So we can represent you. You don't need to bring in any forms. We can just go into your account and see, oh, you have two T4s there. But the third T4 wasn't loaded because the CRA was really late.
Hmm.
We did your return based on what was loaded, and now you're being reassessed because there was income that wasn't reported. Unfortunately, they can do that up to 7 years back. And we see it all the time where people are being reassessed because they're claiming that their income wasn't reported. And if you don't keep track of your notice of assessments and of your tax returns, then it's hard to fight sometimes.
Mm.
And if you are being reassessed because you did miss reporting some income, unfortunately, you are liable for any penalty and interest that may have accrued, but they will make deals with you and they will make payment plans with you. So if you
Hmm.
just explain your situation, they're reasonable. They will. I've seen many clients who I had one client who owned over $100,000 to the CRA,
Hmm.
and
Hmm.
there was no way he could just give them $100,000. So they made a 5-year plan that was,
Hmm.
doable and affordable for him. And that way he was still eligible for his um uh benefits, like his GST check and his,
A hundred
child,
percent. Yeah.
yeah, family
Yeah.
benefits.
The it is so true. Like the best thing is to not ignore it. And they are there to work with you. Like we've got this scary image in our mind, but for the most part, they will work out a plan to make it make sense. Um, we do have one other question, which is pretty common for artists and giggers. So many artists and giggers get certain grants for traveling, for touring, or whatever that may be. How do they report like travel grants that they're getting for touring? Do they have to, because it's coming in as an income, but it's a grant?
It's not considered income because it's a
Okay.
grant.
Okay.
You don't necessarily have to report it on your T2120 because it's
Okay.
not. I'm not 100% sure if you have to report it somewhere else. One of my gig business tax experts would be better equipped to answer that question than me. So I can
Okay.
take that away and find out what you should do with those grants, travel grants, or whatever, and
Yes.
give you a more detailed answer after.
Thank you. Yeah.
No problem. Okay, so deadlines. So if you're self-employed, you need to file your taxes by June 15th every year. If you're paying your own taxes, you need to do by April 30th. A lot of people will just do everything by April 30th. But if you're incorporated, it depends on what you consider your fiscal year. Um, so if your fiscal year, let's say, ends in February, then your fiscal year, your taxes are due 6 months after that. Does that make sense? Okay. Um, so that's when you have to file. You have to pay by April 30th, or if you're incorporated, 2 or 3 months after year end. So your GST and HST return, if your filing period is monthly or quarterly, then if you're self-employed, you have to do it 1 month after the end of the filing period. And same thing if you're incorporated, 1 month. If you file your GST or HST returns annually, then you have to file by June 3rd, June 15th, and pay by April 30th. And if you're incorporated, it's 3 months after your fiscal year end. So every company will have their fiscal year a little differently. Some end in January, some end in February, some end in March. H&R Block, because of the seasonality of our business, our fiscal year ends in June. So it just depends on what you determine your fiscal year to be. So any sort of tax installments. So some people will do the remittance 4 times a year. You can do it, they have to be done March, June, September, and December. And if you're incorporated, it would be every month or every quarter, last day of the month. So June 15th is usually the main deadline that we see a lot of gig workers come in June. That's why we're open year round, because then US is also in July. So we always have clients throughout the year. So we're always open. You can come and see us at any time. So that's it. Thank you for putting up with my computer crash. And I really enjoyed being able to share some tips and tricks with you. And Rhiannon, thank you so much for your partnership in allowing me to speak about what I'm passionate about and to help our conscious economics members to really understand that it's not as scary as you may think. And we're here to help you if you need help.
100%. Thank you so much, Kathy, and for everyone who came out today. I will leave the floor open if there's anyone who has any other questions. You're more than welcome to ask. There's nothing off the table. There's nothing silly. I'm learning myself again as I listen to everything, and luckily I have an amazing support person in my staff now that helps me with a lot of this because trying to navigate it on your own can be overwhelming. So I think you've answered so much and taken some of the spook out of it. Um, I will say, oh, let's see. I think there's a question here. Oh, people are just saying it's very helpful and thanking you. Here's one question. Where are deductions reported? On the T1 or when filing the GST? I think we answered that one already. Yeah, I think we answered that one already. Um, I also wanted to just welcome everyone. I know some of us are coming from all across Canada. If anyone is local to Ontario, specifically GTA, we are doing an event next Friday. It's a full day event for giggers and artists. And so we welcome you to come on out. There are some tickets that are being reserved for folks if you would like to have a complimentary ticket. And it's going to be a full day of talking about our businesses, how to set up our businesses, helping with more financial well-being and personal well-being as we navigate that. So if anyone's interested in that, I'll also include that in the thank you email that we send out to everyone. We do have another artist that's asking about US royalties reported as income. And I think you mentioned this, like globally, any income that you're getting, whether it's coming from US or Canada, must be reported, correct?
Yeah, and US is a little bit tricky because if you earn money in the US, you have to file a US tax return every year. So let's say you earn money last year in the US and then this year you don't, but because you filed last year, you now have to always file a US.
Oh,
Yeah, it's tricky. And we do have you, and US is very complicated and more so than Canada. And they require even more training. Um, so the IRS has specific classes where they must take every year. So I have seven team members that are US trained, so they can file your Canadian tax and your US taxes at the same time. But if you earn money in the US, you have to file a US tax return as well.
oh gosh. Okay. Well,
Yeah.
great. Add that to our mental load and our
Yes.
nervous system.
Yeah.
We didn't actually capture the response. So the person that asked the question around deductions and where they're reported, they didn't hear the response on the T1, or they do it when they're filing the GST. Could you just?
Well, you're going to do it when you file your taxes. So, but my response was you don't put it on your T2120 because that's your income. You're going
Mm-hmm.
to put it on your T1 and your expense deduction. So it's two
Okay,
separate. Yeah.
perfect. Okay, that's helpful. I think we have a few other questions that are coming through here. That was just a thank you. Okay.
Mhm.
So if you are going to claim that US income, then H&R Block does have that covered. Like you don't have
Yep.
to go somewhere else.
No.
Okay.
Yeah.
I feel like H&R, I'm not just saying this, Kathy, but I would much rather just come to H&R Block and give it all to you guys and have you handle it because
See, the
it seems
difference
quite
between using an
reasonable.
accountant and using H&R Block, an accountant does everything, whereas
Yes.
H&R Block specifically trains on taxes. And we have the best tax academies in the world. Like, for instance, I had 250 students registered in my district for level one tax academy. Half of those were from our competitors. They tell
Wow.
people to take our tax academy course because of how good it is. So
Wow.
level one is the only one that's open to the public. Once you become an employee, that's when you're eligible to take level two, three, four, and five. So um, some of our competitors never go beyond level one because they're not required to. Whereas H&R Block, we are. You're required to
Mm,
take training a tax academy course every fall.
wow.
That's the
Okay.
difference. We're the experts for sure.
Yes. So you're in good hands on that
Yeah.
side.
Yeah.
Well, that's super helpful. Well, thank you again so much. Thank you to everyone who was able to
You.
make it out today. There were so many folks that registered that weren't maybe able to come in. So we're going to take this recording, send it out for anyone who wants to go over it again, the presentation again. And like we mentioned, we do have a special discount that's been given by H&R Block. Do you want to just familiarize our participants with what that is again, Kathy, and we'll send it?
So it's up to 50% off.
That's
So
huge.
yeah, which is huge. So it depends. Each complexity, it does raise the price a little bit. So
Mhm.
come and see us, but every discount has a unique coupon code. So we'll send that out to you.
That's amazing. Thank you
Yeah.
so much. I will add all of that. And we hope you have a beautiful day. Hopefully, we can see you again soon. And yeah, we'll see you next week, Kathy. Thank
Okay,
you.
thanks. And I'll just saw that comment. I'll include the link for Tax Academy registration as well for
Oh,
level one.
awesome. Yeah,
Yeah,
that
I'll
sounds
send
great.
that to you.
Okay,
Okay.
thanks,
Thanks,
guys.
everyone.
Bye.
Bye.
Bye.